Hello traders, and thanks for tuning in to this week's market outlook from Exness. In this video, we're giving a possible idea for a trade over the next few days, some of the rationale behind it and what traders need to be aware of if they were to take the position. But before that, let's take a look back at the previous week's idea for a trade. Last week, the idea was a possible buy for American light oil from around $72. The idea was a complete success and then some, with the price having moved up to around $81 at the time of recording after a large gap over the weekend. Now for this week's idea, I'm Michael Stark, Financial Content Manager, and joining me to give the idea is Stanislav Bernichov, Senior Trading Specialist. Welcome Stan, and thanks very much for being here.
Thank you, Michael, for having me today.
What's the idea, Stan, for a possible position over the next few days?
Alright, so I'm thinking of a potential short for gold. However, we should be careful here because it's in a strong momentum, it's in a strong trend. But gold had entered the potentially fragile territory, which is the area between 2000 and 2050. So that's a strategic resistance, long-term resistance. Well, of course, gold now is driven by weak dollar and weakening yields of 30-year treasury bonds, as well as diminishing inflation. And of course, it might easily slide higher towards 2040, 2050 something, so the momentum is strong. However, the territory is fragile, it might be easily pushed down and liquidated towards lower levels. So if we take a look at this big spike, which was happening throughout April 4th, so that's a spike of a continuation, a gap of continuation, if you will. So usually the price tends to fill this empty level to a certain extent. So I won't be surprised if the gold slips down from 2040 towards 2010, so that might be quite a good short trade. However, it pays off to wait until the clear reversal pattern appears, whatever it is, head and shoulders, double top, some combination of candlestick patterns or anything else.
Okay, and can you tell us a little bit about the main narratives or the main drivers in markets that might be pushing gold down in the medium term?
Alright, so first of all, the current narrative, the most dominant narrative, is the diminishing yields of 30-year treasury bonds and diminishing inflation, which was lower than anticipated for the previous month. However, I think that this perceived softness of Fed, which is spoken about in the markets, is a little bit exaggerated, because inflation is still quite high. 6% is high inflation in comparison to what we might have actually. So Fed probably is going to continue keeping interest rates. I don't think about raising interest rates, but they're gonna keep it. So this softness is a little bit exaggerated. The market is pricing in the potential decline of interest rate for the meeting in September. So that might actually not happen considering high inflation. So keeping that in mind, American dollar might be a little bit underpriced in the medium term, as well as gold. So if the market reevaluates the odds of this softness and gets back to medium hawkishness, so gold might be hammered down quite heavily.
Okay, thank you. And finally, can you highlight any important points of data coming up this week? What do you think traders would need to be aware of if they're going to potentially think about selling gold in the medium term?
Of course, it is employment data release as usual in the beginning of the month, in non-farm payrolls and unemployment for the previous month. So it's expected to be at a level around 240K, and we will observe whether this number will be released higher than that, or maybe it will match expectations. I don't think it will change anything significantly, but some volatility, of course, may appear in the markets, and especially it might be visible if the price enters the fragile territory or resistance and then number comes in. So that might be the trigger for the sell-off. So we will carefully observe what will happen in this situation with gold.
So in summary, the idea for this week is a potential medium-term move down by gold. And it's possible that the price might decline below $2,000, but it would be critical to watch for a reversal pattern of some sort, especially considering that in the short term, the bias seems to be more towards the upside. The primary narratives that are driving that move are the limited scope for the US dollar to continue lower in the medium term and the generally exaggerated nature of the Fed's dovishness, while the key data, the key event to be watched by traders who would consider taking the position is non-farm payrolls on Friday, with the expectation of 240,000 for the NFP itself. Thanks very much, Stan, for being here and for giving us the idea for this week.
Thank you, Michael. Trade well. Good luck, everyone.
And remember that this is just an idea for a trade or a potential window of opportunity. It's not a signal and it's not a guarantee of success. Do your own research and trade responsibly.